Remember what Pablo Picasso said: I like to live as a poor man with lots and lots of money. 2023 is going to be an interesting year when considering what investment vehicles to choose from. The stock market has taken a hit. Real estate is down in many sectors, but if you're still creative, you can make money. Crypto is scaring people right now. What to do? Maybe gold, silver. How about artwork, ladies and gentlemen? Yes, artwork people. I had a conversation with a finance guy the other night. He's on a lower level. He's used to looking at charts and graphs all day long. It's all priced in, Tim. He's looking at those trend lines. Trend lines, baby. He thinks there is no trend line for artwork. He thinks art is not an asset class. I get where he's coming from a little bit based on the conversation. I challenged him. If he continues, in my opinion, to think like this, he'll just be another junior analyst his entire life. Two of the most well-known alternative asset classes today are real estate and gold. Real estate is at the foundation in the rise of capitalism during the 19th century. Real estate investing has been around for over 200 years. Since the beginning of time, gold has been the foundation of civilizations, trade, investment, and economies. We need to go back to the gold standard. All the elites are hoarding gold right now. Look at this chart. Take a look at this. While there is no argument that gold and real estate is a strong alternative asset class, when you study this chart, it's pretty damn impressive. How art performs compared to other asset classes. Comparatively, art has performed at least twice as good compared to other asset class losses. So, all things considered, it's safe to say art is best classified as an alternative investment asset class. It is an asset class. The art market, is huge. It's ridiculous, especially the last couple of years. When you look at the art market in 2021, was a very, very good year, with aggregate sales of art and antiques by dealers at auction houses reaching an estimated $65.1 billion, representing a 29% increase on the previous year. Total estimated global value, $1.7 trillion. Art represents a massive asset class. Art is comparable in size to other major private markets, all of which have participation from hundreds or thousands of institutions. So it's absolutely incredible, folks. Like I said, I've had the privilege of knowing someone who took me under their wing, and he's been investing in art over 21 years. Over 80% of art transactions occur in just three countries: the UK, USA, and China. Specifically, three classifications of art buyers exist. Investors, traditionalists, aficionados. So in 2021 report that I was delving into and looking at art as an asset class, I quote that there is a growing recognition of art as an investment class by investors. People become more sophisticated in their financial and estate planning, and they begin to view art as an investment, 100%. The reason for art's growing status as an asset is simply because of the price levels at which it can now trade, making it a more meaningful part of high net worth individual portfolios. The big ballers are buying artwork, and that sets the tone. So art as an asset class is attractive over the long run, as it is a store of value that generates moderate positive real returns. Art has also a low correlation with stocks and bonds, which offer diversification possibilities. So when we talk about within the collectibles, and I've talked about this in other videos, we look at the market holistically, which includes jewelry, watches, sports memorabilia, collectible cars and wines. You look at sports memorabilia, how it shot up, and art. Art accounts for roughly 75% of annual transactions value. Art dominates the share of the collectibles market, is largely attributable to the international scope of the art market, greater demand levels for the asset, and a higher average price point per object. The cultural significance underlying the uniqueness of each individual work of art creates a scarcity not generally present in other collectibles, where additions and multiples are common. even at the high end of the market. So we take two that I'm very familiar with. If you play this game, you know, Sotheby's, Christie's. They posted record annual sales, even defying a weak economy. Auction houses have rebounded quite well compared to other classes from the pandemic era issues. So, if you look at some key takeaways, combined revenue for the auction houses, both founded in the mid 18th century, increased 75% from just 2 years ago, folks. Christie's benefited from a record-breaking $1.6 billion sale of Microsoft co-founder Paul Allen's art collection. He unloaded it. Sotheby's reaped $1.1 billion in sales over just 5 days in May. Auction houses specializing in the sale of expensive art and collectibles registered record revenue this year, defying a global economic downturn as rebound from pandemic-era shutdowns. It's going to be a lean year, creative, and the big ballers are going to be moving more money into artwork in 2023. So London-based Christie's announced annual sales of $8.4 billion in 2022, astonishing $7.2 billion via auctions and an additional $1.2 billion in private sales, the highest in its 256-year history. It's incredible. New York-based rivalry Sotheby's reported $8 billion in sales this year, also a record for the 278-year-old business. It's just incredible. So both houses had a second year of strong buying interest after the pandemic, hindered auctions in 2020, and both benefited from unprecedented sales of individual collections and featured events. Got ballistic. So Christie's, whose sales increased roughly about 18% from last year, secured about a fifth of its 2022 revenue with the sale of late, Microsoft co-founder Paul Allen's extensive art collection. And, incredible. So that collection spanning 500 years of art history, he sold the whole deal for $1.6 billion, making it the largest ever single owner sale. 5 paintings, including the works, you had Cézanne, Van Gogh's, sold for more than $100 million a piece. Talk about that trend line. It's a small group of people. That guy in New York buys some, that broker in LA, they know. Trend lines are set. So the picture at rival Sotheby's is more complicated. From my learnings, the company's revenue rose 10% from a year ago due to its ownership stake in car auctioneer RM Sotheby's and real estate auctioneer Sotheby's Concierge Auctions. So they got a lot of verticals going on right now. Sales of fine art, so it was kind of harder for me to pin down. And luxury items totaled $6.8 billion collectively, and 7% decrease from last year's $7.3 billion. So they got a lot going on. Nonetheless, Sotheby's also benefited from the sale of high-profile collections, such as that of they did a New York real estate developer, Henry Macklowe, and his ex-wife went through a big-time divorce, very bitter, the New York Supreme Court got involved in 2018 and ordered the auction of the former couple's entire collection. He was shedding some tears. So the auction and 5 others in the series featured 1,900 art, brought Sotheby's roughly $1.1 billion in revenue in just 5 days in May. Unbelievable. So, bottom line is global auction houses, because of their generally wealthy clientele, often are immune, to big time fluctuations in the global economy. And, but as the pandemic, showed, that's not always the case. There were some issues. Christie's sales fell to $4.4 billion in 2020, down 24% from the previous year and its lowest since the global financial crisis in 2008. And Sotheby's 2020 sales plunged 16% to $5 billion. But they still made out fantastically well. So, if you look at the pandemic, it opened up other business avenues for auction houses. Christie's is not stupid. Their online sales, for instance, rose 262% in 2020, and interest for first-time buyers and millennials increased. This year, first-time buyers accounted for 35% of Christie's revenue, with millennials accounting for a third of the auction house sales. So it's good to hear. And from my research, you have a lot of forward-thinking individuals, millennials, and are getting into this game. I've been in this game for 18 years on a lower scale. I'm not a big baller, but I do buy. And I was just blown away by my buddy when he took me on a cruise ship a long time ago, back in 2003 or 4. And I bought my first Urte. I bought an Urte for $3,000, and I still have it. But I play, and I think putting, depending where you're at and what level you're at, 5 to 15, 20% of your whole entire net worth into artwork. Absolutely 100%. You're going to have to be creative in 2023. I like it because you own it. There it is on the wall. You don't have to worry about your stockbroker. You don't have to worry about some tenant. But don't get me wrong. I still believe in the stock market. Dividends are nice. I still believe in real estate. I like to go hug my building. I like to go hug my building rather than go look at the Apple building and say I own stock in Apple. So I believe in those classes as well. But this is another investment vehicle that I think you should strongly consider. And, I meet with clients all the time. A couple of them are big ballers. A client of mine in New York that hasn't done any business with me yet. And I spent a lot of money on dinners. We do some other business, though, together. But as far as real estate, he's busted me out a little bit. But he's a massive collector, millions of dollars. So, I have these conversations with people. And when you have very wealthy individuals putting money in art, it sets the tone. And it's something you should consider. They're going to have record profits next year. And you don't have to go crazy, but just play a little bit, put some money in it. I think it's an interesting asset vehicle. I've made the argument up to 2 years ago that it's an asset class, but I still talk to people today that, especially analysts and finance guys, some don't get it. The higher level ones get it, who are talking to clients that invest in art. But it is an asset class, and there's money to be made. Take care.